We'll catch up with 50 Up Club's Christopher Zinn every Thursday night. He's with us on the line. Evening to you again.
Yes, good evening, Steve.
We're going to talk about life insurance tonight. It's a topic a bit like superannuation that I deal with on nights every Monday night with Peter Switzer. It's a topic that a lot of people don't talk about. It's also an industry that's got a pretty bad reputation.
Yes, it has. And in fact, it really was the life insurance industry and people coming round collecting small amounts of money and being salesmen as opposed to actually looking after you that really begat a lot of problems in financial advice, which have been dealt with separately and still are being dealt with. But life insurance, while we've had this huge argument over financial advisors, life insurance actually was carved out of that. It wasn't covered with all the changes which stopped commissions happening. But today we've really heard that the Assistant Treasurer Josh Frydenberg has come up with some proposals which most of the industry have agreed, which is really going to limit the amount of commissions, which were massive and actually led to all sorts of problems.
Pre-superannuation, Christopher, everybody had life insurance. It was a massive industry. AMP, I guess, is the biggest name that we all remember from the 60s and 70s and into the 80s. Post-superannuation, I imagine a lot of people have the misapprehension that their superannuation acts like life insurance, but it actually doesn't, does it?
Not necessarily, because actually the default amount can be pretty low, and I've been just looking at some figures really suggest that it comes nowhere near. You really need 10 times. Say you've got a couple of kids, you need life insurance that's going to be 10 times your annual salary, and that's that's to look after things if you don't make it or whatever. But really, the average amount people have as a default in superannuation can be really a fraction of that. So you need to check to make sure. And also, there's very different arguments about life insurance in super. It is cheaper, but it does actually eat away at your nest egg as it appreciates. So there can be some advantage to having life insurance outside. Part of the problem has been the commissions. It is more expensive, but some argue that it does actually pay quicker and pay better should, unfortunately, you need it.
Reading about these reforms today, I mean, the media reporting of this talks about how the federal government's going to set up this major shake-up. And they describe, the media reports today describe the industry as dogged by bad advice and high commissions. Now, if we hark back from your pre-50 Up Club days to when you were with Choice, I bet you did plenty of examinations of commission gouging and bad advice out of life insurance companies, didn't you?
Unfortunately, yes, and it's the issue of planners, because the way it was structured is that they could get an upfront commission of 120% of the first year's premium, and then a trailing commission, I should say, subsequently with that, which could be 20% of the amount. And if you look at, say, even at my tender years, my life insurance, costs $18,000 a year if you include the income protection and the permanent disability as well. So it's a very costly thing to have. The commissions have been great. I think something I also learned in those days was actually the misapprehension that we in the public have about life insurance. I took a call from an elderly lady once who was complaining that her husband, who was in his late 70s, how high the premiums were, because they do, as you get older, they get very high. And she thought that the life insurance was to pay her off when he died, albeit of natural causes. But really, life insurance is designed, it should be unaffordable once you get pretty old. It's really just to cover for the debts that you might have when the family, has mortgages, has education bills or whatever.
So you're not talking toward a lump sum payment necessarily?
No, I mean, as I say, life insurance, and this has been explained to me, it's really doesn't insure you against death. It's more a debt insurance. It's to help cover your debts should you, as maybe the major breadwinner not be around anymore. Is to help your family. But the idea that life insurance pays off when in your 80s you meet an end is not the purpose of it. And as I say, would cost an extraordinary amount if you got that old and you were still paying it.
So these reforms today, what's the key to them? This is basically cutting back on commissions, is it?
It really is. So it means that basically, an ASIC, the Regular Security Investments Commission, did some work earlier this year, and they really found that the commissions jaundiced the advice and the products that people were pushed into it. That some advisors also churned people, so every 2 to 3 years moved them to another insurer because they were getting that commission all over again, and perhaps the cover wasn't as good as it had been before. And of course, every time you move, there's more medical bills, and as you get older, you might get sicker, and that could lead to more exclusions and complications. So look, it does really clean it up a great deal. There's still a big problem with underinsurance. I've seen statistics saying there's only 4% of the population with really adequate cover. There's a whole lot of people who don't have cover. I think that's going to be the next one. But certainly this will help and hopefully restore some confidence. You know, planners, again, I had my life insurance switched last year. The planner had to do a lot of work to find me a better deal and the way to structure it. So he's got to be paid for that. It was from the commission. I'm happier doing a fee for service, but sometimes they have to put in enough work that fee could be $2,000 to $3,000. So, you know, there's a lot of things to balance.
Has 50 Up used its muscle yet to get a better deal on issues like life insurance?
There is a life insurance deal, and people can go to 50 Up Club and have a look. You know, there's life insurance you'll see advertised on TV and you don't need a medical. There's life insurance you can get through advisors that I've said. There's ones you can get through superannuation. This is one that goes direct, so it does cut out some of the middlemen, so that has cost advantages. But I would just suggest, you know, look at the ASIC website. There's some very simple explanations of life insurance. It is something which people who have children or who have debts or who care about what might happen if they're suddenly not around anymore, or in fact they're permanently disabled, it's well worth looking at. It can be costly, but if you check it out, you can reduce those costs.
So anyone listening to us who doesn't have life insurance really needs to have a think about that, don't they?
I think they do. Look, and again, your superannuation fund can help, although, of course, they will tell you
but in my case, I mean, I've got a self-managed super fund, and that doesn't automatically, unless your financial advisor expressly goes and does it or advises you to do it, have an insurance component to it.
No, it won't. But I would hope anyone who'd set up self-managed super would be advised to sort of cover life insurance in some other way. But again, you know, one can never take these things for granted. So, yeah, not only find out about life insurance, but find out what your cover is. And I say a simple call to your super fund to ask what the amount is, and then do 10 times your annual salary. If there's a gap, I would kind of do a little bit more research.
I would not be amazed if 9 out of 10 people listening to us had no idea what their life insurance cover was.
And look, I didn't until I looked into to what the super is, but it really was, you know, in my case, I think it was about $40,000, so it would not have made much of a party for my farewell for my family's sake anyway. So yeah, life insurance in super has some advantages. As I've said there, it's different from paying outside super, but there's swings and roundabouts, and that's where you really need to look. And you know, I wish I could advise how to find a planner who can help you in this case. But look, there are people prepared to do a fee for service. I think it's well worth checking out. There are planners who can do this in a very fair, straightforward way. But just ask them, you know, is it a commission or is it a fee for service, and what are the sums involved? They should disclose that. Always a pleasure to catch up, Christopher. I'll talk to you next week. Yeah, thank you. Bye. Christopher Zinn there from the 50 Up Club.